Welcome to another S&P 500 analysis. Today is January 8, 2022. The new year started with the typical New Year rally on Monday and followed with a bit of enthusiasm on Tuesday. Then the market settled down and started looking at what lies ahead for the new year. On Wednesday, the FOMC minute was released, and that helped remind the market participant that things will change in 2022. Either for the better or for the worse. And I believe it will be for both. For the better, I believe we as a society will start to live with COVID-19. With the vaccine and the recently approved antiviral drugs, and also with the recent outbreak from the Omicron, it will get us closer to herd immunity, and this could change the pandemic into an endemic. And the worst will be the reckoning from the easy money the Fed and the government have been injecting into the market. The $3 trillion printing spree from the Fed will come to an end after it has generated inflation that we have not seen for over 30 years. This easy money not only generates huge wealth inequity between the top 1% and the rest of us, it will now punish the middle and the lower income family with inflation that will further make it harder for them to stay afloat. And yes, this free money also generates never heard of or unimaginable stock valuation. And that is not just limited to a few high-flying tech stocks. If you simply look at the market cap of any publicly traded company that have been around for a while, you will notice they are in the tens of billions, if not in hundreds of billions of dollars in market cap. And last week, we saw Apple reach a $3 trillion market cap. Seriously, is Apple really worth $3 trillion? And Tesla is over $1 trillion market cap. And there are talking heads saying Tesla's stock price could eventually get to $4,000 a share, and that put Tesla in the $4 trillion market cap. And when that happens, what will Apple be? 10 trillion? I can tell you we will all be millionaires if that happens. But of course, the millions that we will have will worth much less than today's million. So what is in store for 2022? If you watched till the end of the video I posted last weekend, you heard me say we will see stocks in the financial, energy, healthcare, and utility sector to be in favor as the market is shifting from the speculative to the more defensive mode. So in this video, we're going to review the index and see where the market will be headed in the near term. So stay tuned. And before I begin, let me remind you to smash that thumbs up and post a comment in the comment section. This will help promote and share this video to others in the YouTube community. Here, looking at the weekly chart of the S&P 500, as you can see last week, we had a pretty good range. It's 156 point almost, and it did lost a little bit over 89 point or 1.87%. But all in all, if we look at this longer term trend here, the trend is still pretty much up on a weekly, even though we had a pretty much of a down week, like 89 point, but it is still up at this upper portion of this price channel, and this is a ascending price channel. So until we see something that come down and break this channel, one would basically just being a little bit more cautious, and wouldn't be surprised to see a little bit more downside. So the question that we need to ask is, are we going to be seeing something like this? This is basically the pandemic sell-off here, or something like this, right? Similarly, we had a little bit of a upward movement in the upper channel. Then we start breaking down the price channel, and that's where we get this flush. So we'll come down here and get this flush here. Now let's take a look at the sentiment chart here. As you can see, this is the last week's price action for the S&P 500. And as you can see, this is Wednesday sell-off. you see that the VIX almost came up to this 20 level at the close. During intraday, we actually did move up to the above the 20 level, and also notice that the put call ratio on Friday, it closed at 0.71, so we're getting close to that 0.75 level that we've been using as a threshold that the market participant is start putting hedges on. Right now, it's getting close to that level, and also one thing to notice, and on Friday, it actually is higher than on Wednesday, the put call ratio. So that is something to bear in mind. That's just an indication that the market participant is putting a little bit less risk. And here looking at the New York Stock Exchange up-down volume ratio, is actually we are noticing some positive divergence between the up-down volume ratio and also the daily advanced decline. As you can see here, on Tuesday we got a down day, and so did on Wednesday, Thursday, and Friday. But looking at the up-down volume ratio, on Tuesday, we actually got positive up-down volume ratio, and so was Thursday and Friday. The only day that we got negative was on that Wednesday sell-off, and that was due to the sell-off after the FOMC minute came out. And same on the advanced decline. You notice that the advanced decline was positive on Tuesday, Thursday, and Friday, so that indicating there were more advancing issue than declining issue. And also on the up-down volume ratio being positive, indicating that there were more up volume than down volume. So that's a positive divergence on the S&P 500. And one of the reasons why we are seeing these divergence in the positive side for the New York Stock Exchange is because of the rotation from the the growth stock into the value stock. Now, looking at the new high, new low for the New York Stock Exchange, we did not see much of an improvement there. And in matter of fact, we actually saw a little bit of a negative up the new high, new low, indicating more new low than new high. So you can see that the number of new low is coming up a bit. And here, looking at the cumulative AD line for the New York Stock Exchange, we notice that the S&P 500 came down, and put in a little bit of a lower low, just in the little bit of a short term. But notice that the cumulative advanced decline is actually putting a higher low, so we are seeing a little bit of a positive divergence on the short term. Now let's take a look at the NASDAQ market. Here's the price action for the NASDAQ 100 for the last week. And also notice that the advanced decline and also the up-down volume ratio did not show the positive divergence as we saw in the New York Stock Exchange. Notice that the the up-down volume ratio has been negative other than Monday, and same thing for the daily advanced decline. The only day that the advancer led the decliner was on Monday. Other than that, it's pretty much following the index down. And also in the NASDAQ market, we did not see an improvement on the new high, new low. You see the new high actually came back up similarly to the New York Stock Exchange. And the new high is kind of stable, didn't go down much and didn't go up much. So, but we are seeing these negative number on the new high, new low. So you can see that there are 239 more new low on Friday than new high. And likewise for the NASDAQ cumulative advanced decline, similarly to the up-down volume ratio and the daily advanced decline, it is not seeing that positive divergence as we saw in the New York Stock Exchange. You can see that the NASDAQ 100 continue to make a little bit of a lower low, and we are also seeing that on the cumulative advanced decline. So based on the sentiment, we are seeing that the market participant is getting more cautious now. We notice that the put call ratio is coming back up to close to that 0.75. So definitely the market participant are putting less risk, and they might even start putting some hedges on. And also in the advanced decline and the up-down volume ratio, we did see a little bit of an improvement in the New York Stock Exchange, and that's because due to a lot of the value stocks, such as the stock in the financial sector and also the energy sector, is sort of cushioning the drop of the S&P 500, or the the impact that is being made by some of the tech stock, those large cap tech stock. And in the Nasdaq market, sort of reflect that, because we are noticing that the up-down volume ratio, the advanced decline, the cumulative advanced decline, and also the new high, new low, all the internals pretty much in sync with the index is going down. We are not seeing any positive divergence such as we saw in the New York Stock Exchange. Let's take a look at the daily chart of the S&P 500. As you can see, on Monday, it actually closed with a new all-time closing high. And on Tuesday, it made a new intraday all-time high. And we've been waiting for this. Remember, we saw the S&P 500 future kind of alerted us to look for another new all-time high for the ES and also for the S&P 500. Then on Wednesday, we see this big sell-off, and that is mainly after the FOMC meeting minute came out at 2 p.m. Eastern Time. You can see that it went through this 100% of this pivot high here at 47.46 level here, and it came down to this level right now, fill this gap. Remember, we were talking about this gap fill. Now, we're basically looking for a little bit more lower prices, and I'm going to show you why later on. And we essentially look to see would it come down and test this 45.45 level. Okay, so that's the level that we've been talking about for a while, and essentially it's also in confluence with this trend line here. And looking at the Nasdaq 100 here, we notice that the Nasdaq 100 did not close with a new closing high, nor did it made a new all-time high. Instead, we see this continual sell-off with a lot of the large cap tech stock is getting hit, especially some of the FANG stock. So right now, we're essentially looking at this continuation downward move and possibly get on to this 15,345. Break this trend line. If we break this trend line, we'd be looking at somewhere around here, down at this 14,400 level. See that it took out this 15,700 level here last week. So we're basically looking for this 15,345 as a key support level. If it cannot hold that level, then we're essentially looking down at this 14,000 area, 14,006, 14,004 area. And for the Russell 2000, we see that the Russell 2000, we thought it might be headed back up, to this 2318 area. And, after Monday's pop, then on Tuesday, it seems like it was heading up toward that direction. And then Wednesday, it joined the party and sold off after the FOMC minute. So right now, it seems like it is heading back down to this 2134 level here at the lower boundary of this balance area. In the Dow Jones Transportation, try to get above this 618 at 16,617 areas. So it's been encountering resistance up here. Right now, it's pulling back to this pivot high here once again at 16,170. So we're going to see would it be able to get another bounce and actually break above this 16,617. And if it could make up to this level here at 17,039, that would be the closing high. Then that would be positive for the Dow Jones Industrial. But right now, as it stands, it looks like it is more on the downside here and possibly come down to this 15,899, and we're essentially looking to see would it be able to come down to this 15,346. And once again, we're still waiting for this gap to get filled, but I don't believe that it will get filled next week. But right now, these are the levels that we'll be keeping an eye on for the near term. And here for the Dow Jones Industrial, we see the Dow Jones Industrial close with a new closing high, and then on Wednesday actually made a new intraday high. Right now, the Dow Jones Industrial is outperformed the other indexes, and that's primarily due to the shift or the rotation into the value stock. And that's why we're seeing the Dow Jones Industrial holding up better than the other indexes. So right now it's coming back into this channel. Wouldn't be surprised when profit taking or a little bit of a sentiment shift back to bargain hunting on some of the tech stock, and we see a little bit of a profit taking from the value stock, then we probably will see the Dow to make its way back down here to somewhere around this pivot high here at 35,625, and then maybe we get another bounce back up. So again, we basically are looking at a down market here, so it all depends how much of an impact on the Dow Industrial when the SP 500 and the Nasdaq 100 start continue to go down. And looking at the New York Stock Exchange Composite, a broader market index, we see that it also closed with a new closing high on Tuesday and also made a new all-time high, intraday all-time high on Wednesday. So again, this is also a reflection of the rotation into value stock. You can see that on Friday actually closed up, and also on Thursday it closed up with a gain as well. So wouldn't be surprised to see this New York Stock Exchange Composite Index holding up at this level and possibly continue to make its way up to another high or close with another new closing high. So depending on the value stock, how that rotation holding up, and we will see that in the Dow Jones Industrial and also in the New York Stock Exchange Composite. Here's the look of the 10-year yield. Remember, we're basically looking for it to come up to this 1.765, and you can see on Friday it actually went above that and also closed above that. It closed at 1.771. So definitely the 10-year yield is spooking the market right now, and we're going to see how high will this go before it triggers some talking point from the Fed to try to calm the market down. Now let's take a look at the US dollar here on this weekly chart. You can see that the US dollar actually got a spike up last week, and it's still trying to hold above this 95.7. So we're going to watch it to see the coming week be able to come back up into this zone and try to make a decisive move up toward this $97 level. Otherwise, we're basically looking for this thing to pull back and possibly come down and retest this 94 level. And from this weekly chart of the crude oil, we see that it actually went above the $80 level last week, but it did not close above that $80. But still, we are looking at more upside to come, because I'm still looking at this level here, somewhere around $85. Although right now it is still having a little bit of a difficulty getting above 80, but I wouldn't be surprised to see that go up, especially if the dollar pulls back a little bit more. Then it just kind of give us a little bit more strength here on the back of the weak dollar to push this up. And for silver still have a little bit of a difficulty to move away from this 2272 level. Seems to be still hovering at. So we'll kind of keep an eye on to see would it be able to bounce back up toward this 24.7. And if it dip back down below this 2275 and break some of these level here, somewhere around 22, if break below 22, we could see silver possibly make its way down to retest this 1960 level. Now for gold is actually looking a little bit positive to me, at least, although it did have a down week, because I'm basically looking for this thing to come back into this area here near this trend line at 1764, 1760 area. So if it come down to this level, I might just go ahead and start a little bit of a long position here to see what we see gold bouncing back up for this 1923 level. And if it doesn't, let's say come down here and just take a quick small loss and then wait for another setup. And if it does come down to this level, then maybe it will come back and retest this zone here. Then we'll basically look for a long setup, such as these candle or these little wick, spike down and then get back up above the 1716. Then take a long there and see would it make itself back up, at least back to this 1804 once again, right? So that's basically what I'm watching for gold. Now let's take a look at the SPY, the ETF for the S&P 500. You can see last week it had been chopping around in this high volume zone here. Ever since that it broke this, this particular balance area here on Wednesday when the FOMC meeting got released. You see there's very little volume coming down, right? And then now it's coming down here to chop around. So next week, I think the thing to pay attention to is, will we get a price bounce back up to this upper portion of this balance area? That's basically coming back up to this 471 area. Or will it break this balance area and start making its move down to this 461.50, this high volume node, and see would it be able to hold? If it's not, then we're basically looking at this 459 area, the other high volume node down here. So those are some of the levels to keep an eye on for the coming week. Now let's take a look at the QQQ, the ETF for the NASDAQ 100. As you can see from this swing here, this particular swing, and been pretty much in this huge chopping area, right? Or you could call it a balance area. So right now it is down here at the lower portion of this balance area. We'll see, would it be able to get a bounce back up, or would it come back down and break this balance area and move toward this 365. This is another composite point of control. So we'll have to keep an eye on that, because on Tuesday here, it looked like it was trying to make its way back up toward this 400 level. Then on Wednesday, it broke down from the FOMC minute release, and ever since then, it just kind of worked itself way down to this this low volume zone here, this node here, and essentially it's pretty much into this lower portion of this balance area. So just keep an eye on this. If it breaks, be below this level here, which is somewhere around 378, 379 area. If it breaks that, then keep an eye on these zone here. I would watch these zone somewhere in the 375 area, and then this area here down to this 365. If it break this level and doesn't get a bounce, get a rejection at this low volume node, then look for this 365 to get tested. And here for the Russell 2000 ETF, the IWM. See, right now it's still chopping in this high volume area here, this composite value area. But if it breaks this 214.45, then we're essentially looking at this lower level here, somewhere in the 209 area. So this this balance area could turn back into this huge balance area that it could be chopping around on. And so if we see this this break below this 214.50 or so, then watch for this 209 area. Now finally, let's take a look at the E-mini S&P 500, the market profile chart here. Remember Wednesday we had some single print, some four structure here, and as you can see on Thursday it filled this single print area here. All right, this is the Thursday market profile, and still leave these two single print zone to be filled in the sometime in the future. We don't know when it's going to do that. Then on Friday you see that the the point of control got shifted again on the downward side, and also the value area as well. And so you can see that the value area shifting down with almost no overlap. Remember on Wednesday, we saw the point of control was up here, and we said Thursday, all it did was basically move the point of control down here to kind of indicate to us that the market is seeking lower prices, right? And once again, on Friday, it shifted down. Also, the other thing is one of the reasons why I'm still expecting a little bit more downside before we see a turn in this market is because of this poor low here, right? We had this poor low on Friday. So this poor low has to be taken out. So although we close up here, settle at 46.68, my suspicion is we will come down and take out this poor low, fill this single print, and also come down here and fill some of these single print and test this point of control here. Remember we talked about this balance area here, about this balance area, and it broke. And we say the next potential balance area would be somewhere around this area here. So you can see that once it broke, it came down, and right now seems to be a little bit of a balancing act. And the next potential area for the balancing is down here at the single print. And since we have this poor low, that's sort of like a magnet to pull the price down to this level. And once you get down to these level, we are going into an imbalance area. Because remember we were saying that the market go from balance to imbalance and then to balance again. So right now, if it is balancing here, we're essentially waiting for this thing to break balance and get into imbalance by going down here to repair this poor low. That will bring it into an imbalance. Then it will work itself down here and try to balance in this area. So I'm still looking for the possibility of 4600 for the ES. So I hope you enjoyed this video, and be sure to smash that thumbs up. And also, if you have any comment, leave some comment in the comment section below. Thank you for watching, and stay safe.